Welcome! Today, we're jumping into one of the biggest debates in modern finance. Is Bitcoin the new gold? We're pitting old money against new tech in a showdown to see if they're really two sides of the same coin or something else entirely. Let's get into it.
You've heard it a million times, right? Bitcoin is digital gold. It's an incredibly powerful idea, a simple narrative that's pulled tons of people into the world of crypto. But is it actually true? Is that comparison really fair? Well, that's the big question we're going to break down today.
So to get to the bottom of this, we've got to start at the beginning. Where did this whole digital gold idea even come from? Let's unpack the core arguments that built this entire theory in the first place. The fundamental theory is actually pretty simple. The argument goes that Bitcoin has a lot of the same key characteristics that have made gold the ultimate way to store wealth for centuries. The thinking is, hey, we live in a digital world, right? So we need a digital way to protect our wealth. So what's the actual logic here? Well, it really hangs on four big ideas. First up, it's finite supply. We know for a fact there will only ever be 21 million Bitcoin, period. Just like there's a limited amount of gold in the earth. Second, because it's decentralized, there's no CEO, no central office calling the shots. That leads right into the third point. It's not controlled by any single government or central bank. And when you mix all that together, you get the final piece. The idea that it's a hedge against inflation, a way to protect your money's value when traditional currencies start to slip.
But look, to really put this theory to the test, we can't just look at Bitcoin by itself. That's like trying to judge a rookie without knowing anything about the Hall of Famers. We need to understand what we're comparing it to, the classic safe havens, gold, and silver. First off, what even is a safe haven asset? Think of it like a port in a storm. When the markets get chaotic, when fear is everywhere and stocks are dropping, investors run to assets they believe will hold their value, or maybe even go up, while everything else is sinking. And in that world, gold and silver are the undisputed heavyweights. I mean, we're talking about a track record that spans thousands of years. You can literally hold them in your hand. They're recognized everywhere on the planet. Plus, they're actually used for things like jewelry and electronics, which gives them a real-world value floor. And crucially, compared to other assets, their prices are relatively stable. They've been the classic go-to for protecting wealth against a weakening currency for generations.
Okay, so we've got our benchmarks defined. Now it's time for the main event. Let's put Bitcoin in the ring, right across from the classic precious metals, and see how they really stack up attribute for attribute.
And wow, when you put them side by side like this, the differences just jump right out at you. Yeah, they're both scarce, but one is dug out of the ground, the other is limited by computer code. And just look at the history. Over 5,000 years of trust versus about 15. But the real showstopper here, volatility. Gold and silver are known for being stable. Bitcoin is famous for being, well, the exact opposite. It's wildly volatile. Throw in the fact that Bitcoin's regulations are still being figured out all over the world, and you can see why their roles are still viewed so differently. And if that table didn't make it clear, this chart really drives the point home. Just look at these numbers. Gold's annualized volatility sits around 15%. Silver's a bit more active at 30%, and Bitcoin, a staggering 70%. I mean, that's just a whole different universe of price swings. For something to be a true safe haven, a place you run to for stability, that kind of volatility is a massive, massive problem for the narrative.
All right, so theory and attributes are one thing, but what happens when the rubber meets the road? How do these assets actually behave out in the wild? Let's stop talking about what they should do and start looking at the cold, hard data of how they've actually moved during some really crazy economic times. You know, the last few years have basically been the perfect stress test. We had unprecedented government stimulus money being pumped into the economy. We saw inflation fears spike to levels we hadn't seen in decades. We even had a regional banking crisis that shook people's faith in the system. And then we had a landmark event for crypto itself, the approval of the spot Bitcoin ETFs, which suddenly made it super easy for anyone to buy Bitcoin. These are our real-world experiments. Now this is where it gets really fascinating. Take a look. During those big economy-wide shocks, stimulus, inflation, the banking crisis, we saw a positive correlation. They kind of moved together. The digital gold theory was holding up. But then look what happened during a crypto-specific event, the ETF approval. The correlation completely flipped and went negative. They moved in opposite directions. This is a huge clue. It tells us that while they might react to the same big-picture fears, Bitcoin is also being driven by its own, totally separate world of events.
So that data really brings us to the heart of the matter. What's going on behind the scenes? What are the fundamental forces that sometimes make Bitcoin and gold act like they're related and other times make them act like total strangers? Let's break it down. Okay, so the things that push them together are really about fear on a massive scale. When people get worried that their dollars are going to be worth less tomorrow, when they start losing trust in the traditional banking system, or when there's major instability in the world, they look for an escape hatch. And in those moments, both gold and Bitcoin can look like attractive alternatives to the mainstream system.
But, and this is a big but, what pulls them apart is everything that makes Bitcoin, well, Bitcoin. You have crypto-only events like the halving, which cuts the new supply of Bitcoin and has a huge impact on its price, but means absolutely nothing to the gold market. Then you've got news about regulations, breakthroughs in the tech, and the simple fact that Bitcoin often trades more like a high-growth tech stock than a slow and steady commodity. These forces make it dance to its own beat.
You know, there's a quote from a market analyst at Reuters that I think just hits the nail on the head. They said, Bitcoin isn't behaving like a replacement for gold. It's creating an entirely new asset class with some shared DNA. That perfectly sums up what we're seeing.
So after looking at the theory, the stats, and the real-world data, where do we land? Is Bitcoin digital gold? The evidence pretty clearly says, no, not really. It's something much more interesting. It's a unique hybrid asset, part tech stock, part digital commodity, and part a grand experiment in what a safe haven can be.
And that leaves us with one final, massive question for the future. As our whole financial system keeps changing at lightning speed, are these two assets going to become allies, both finding a place in a smart, diversified portfolio? Or are they destined to become fierce rivals, fighting over the same pool of money from investors looking for safety? Honestly, that's a story that's still being written.